Are you looking for a simple beginner's guide strategy to help you trade US 30? Well, guess what? You came to the right video, because in this video, I am literally going to give you a simple scalping strategy and break it down for you so you can literally start trading right after you finish watching this video. So make sure you watch this one all the way through, because your boy got you. And oh, one more thing, make sure you like, comment, and subscribe. So for those that don't know who I am, I go by the name of Solo E, and a lot of people know me as a musician. But not only that, I also teach Forex, as I've been doing this for literally 4 years now. And I can tell you that I think I got this. So yeah, other than that, I also teach entrepreneurship, music marketing, and of course my favorite, music in general. So if you aren't, once again, make sure you do me one huge favor and subscribe to your boy. Now, one other thing before we get into this, there is a specific broker that I do use to scalp and only scalp, and they're called Henko Trade. The information is down below. So if you guys are interested in that broker, you can sign up. The process is very simple, and like what I said, I got you, so don't worry. So let's go ahead. We're gonna actually hop on my computer and we're gonna look at these trades, and I'm gonna show you guys what I look for a scalping strategy, and make sure you have that mindset of making money, because yes sir, we're gonna make some money. All right, so now we are live and direct, and as you see here, we currently have TradingView US30 live. So before we get into it, once again, make sure you sign up with the broker down below. Like what I said, the spreads are very, very low, and this will help you. If you have a small account, this will definitely help you to start trading indices like US30 and all of that. So when we get that, now the second thing is we need to get two different moving averages, and one of the moving averages would be the 8 EMA, and the other moving average would be the 200 EMA. Now the 200 EMA is this blue one, and then the 8 EMA is going to be this gold one right here. Now this strategy works when a market is trending, or when a market is up, down, or even in a sideways trend. It does not matter. Obviously it does better when it's trending, but we can still make some good money with this. So first thing that applies is rules. Rules. I don't care what you guys see me teach or whatever it is. If you ain't got these rules, you shouldn't be trading at all. So rule number one is make sure you only trade when you have all of the rules. And I said this in my previous video, but this is so important. Make sure you only trade when you have all of the rules. Rule number two is, all right, if the market, and we're going to go ahead and I'm going to kind of cherry pick a little bit, just because I want to show you guys how effective this is when it's going diagonal, sideways, or whatever it is. I'm going to show you how it works. All right. So when the market is in the sideways trend, I'm going to just say consolidation, you, second rule, need to find a price action candle or a price action pattern. A price action pattern are the double bottoms, double tops, and head and shoulders, inverted head and shoulders, triple tops, and triple bottoms. You must find one of these patterns. After you found that pattern, then you can look for that initial sell or initial buy. So right now we are currently looking at the 5 minute, and this is where we're going to focus just only on the 5 minute time frame. But we're currently looking on the 5 minute time frame, and we're just looking for a pattern to be formed around our moving averages. Now the moving averages, why we have this is because it's going to help us for two things. It's going to tell us, is this consolidating or is this a trend market? If it's consolidating, the moving averages are literally going to be like this. So this is what price is. You got Japanese candlesticks, and then the moving average is literally going to constantly do that. That's when we will know if literally price is consolidating. If price is in an uptrend, meaning it's going up, then we need to see this. Our moving averages need to be literally like this. Like this. So moving averages need to be below the candlesticks in order for us to know that it's an uptrend. Now, if it's a downtrend, the same thing applies, but vice versa. The moving averages have to be above the candles, which give us indication that's a downtrend. So if we pay close attention here, we have what we call an uptrend, right? So since we have an uptrend, cool. Now, if you pay close attention here, we have what we call consolidation. So this applies for anything. So let's go ahead and see if we can find any patterns when we move to the right. So right now, we are looking for double top, double bottom, inverted head and shoulders. Now, when you guys start seeing these type of long wicks and all of these different candles, don't be afraid to trade these. We're going to focus on rule number 3, which is looking into a candlestick pattern after we find some type of price action pattern. So right now, if you pay close attention, we have one head and shoulder, and then we have another head and shoulder inside that. So if you pay close attention, we have a shoulder here, a head here, and a shoulder here. Now, if you pay closer attention, we also have another shoulder here, a head here, and a shoulder here. So, what does this mean? So, rule number 3 is we must get an engulfing candlestick pattern after rule 2 applies. And this works heavily in any trend, consolidation, uptrend, or downtrend. So, when we look at this right here, we see we got an engulfing candle here. Now, this is applying off of this head and shoulders, which is this right here, and it's also applying off of this bigger head and shoulders right here. So just for y'all, so y'all can really see what I see, this is really the head and shoulders. Now, one thing that you must know is, in order for you to consider a head and shoulders a head and shoulders, is it must break the neckline. In order for that to be valid, it must break the neckline, which this is the neckline. However, the bigger head and shoulders neckline never broke yet, so we're not interested in that at the moment. But since we got a special inside the upcoming head and shoulders pattern, we have this one right here, right? So we have this pattern being formed right here, head and shoulders. As you see, neckline broke with the engulfing candle. Let me go ahead and move this up a little bit. But neckline broke with the engulfing candle, and boom. So now what I use with my 8 moving average is rule number 4. Rule number 4 is that after I get rule number 3, and I'm going to have all of the rules in the description so y'all will know. But after rule number 3 is applied, then what I will do now is make sure that the 4th rule is that engulfing candle must break out of my 8 moving average. If it's not breaking out of my 8, if it doesn't close out of my 8 moving average, I am not interested in the trade. So you only hop in the trade after it closed out of your 8 moving average. All right. So as you clearly see right here, it closed out of 8 moving average. Now, this is a question that a lot of you guys will be asking me. Well, where would you TP at? Where would your TP, your stop loss be? So this can work 2 ways, and I highly recommend you still back testing this. You can go 2 ways about this. You can do a 1-to-1 risk to reward, just because we are scalping, so we fine with the 1-on-1s. Or you can do from the previous low, right? So the previous low is these areas right here. So if we wanted to move it all the way down here, you can do that as well, which probably be a 1 or 2, which is even better. Now your stop loss, you can do a couple pips away from your entry, or you can do it from the previous low or the previous high. If I was to do it from the previous high, that's fine. But just remember, I still need that trade to be a 1-on-1 in order for me to take the trade. So if it's not a 1-on-1, I'm not taking the trade. So basically, if we wanted to do that, then we can. And as you see here, boom. And we pretty much had hit TP. Even if we were to do from the previous low, which is right here, we would have actually had hit TP. Well, it took some time, but we would have still smashed TP. So that's how it looks. This is how this stuff looks in the consolidation. Now, if you guys pay close attention, you do have a lot of different other patterns being formed. So if you really wanted to notice something here, let me give you an example of something. So right here, we have a head and shoulders pattern that just formed as well in a 5-minute. And I want to show you how important it is to make sure all rules apply. Just because it looks pretty don't mean that it's really pretty. So after the neckline is broken, you can then look for your actual trades. All right. So the neckline then essentially broke. It didn't essentially break into right here. But to be honest with you, we have no type of rule for rule number 3, which is basically an engulfing candle. We don't have that here. So since that didn't apply, as you see, market did go up and then it went back down. So guess what? If you wanted to look for another entry, you have to wait on those rules. Just because it went up and went down, no. That's the reason on why I love this strategy and why I stick to those simple rules. I'm going to put the rules down again so you will have it. All right, so that's basically how this simple strategy works. Now, I can go way more in detail with this, but if you guys are interested, make sure you subscribe to my boy YouTube channel. And of course, if you guys want to get in with the courses and even the signals, you can sign up down below. Other than that, I appreciate the love, guys. Your boy Solo. I'm out, and I'll see you guys in a bit. You did.